Welcome to our latest tax news briefing. We're going to break down 4 key updates that could directly hit your finances. And we're kicking things off with a pretty critical date you need to know about. Okay, let's dive right in. You're going to want to circle November 26th in your calendar, like right now. Why? Because that's the day the new autumn budget is announced. And trust me, the decisions made on that day could really shake things up for all of us in the coming year. So, first up, the autumn budget. All eyes are on the chancellor, right? There's so much chatter about what this could mean for the country's finances and, let's be real, for our own wallets. So what exactly should we be keeping an eye on? What's really interesting is that we're still feeling the effects of the last budget even before we get to the new one. There are some pretty big changes that are already baked in. For instance, come April 2026, the capital gains tax rate for business asset disposal relief, that's BADAR, is going up. And there are some huge shifts on the horizon for inheritance tax, too. The bottom line is, the ground is already shifting under our feet, even before any new announcements. So what's on the table for this budget? Well, it's that classic political tightrope walk, isn't it? On one side, you've got these firm promises. No hikes to the main rates of income tax, national insurance, or VAT. But, and this is the big but, if the government needs to raise cash, where are they going to look? Well, that's where you see the potential changes. Things like putting a cap on pension relief or tweaking the rules for landlords. It's these so-called stealth taxes that you really have to watch out for. And speaking of potential changes, this one is a biggie. There's a lot of talk about aligning capital gains tax with income tax rates, and honestly, that would be a total game changer. Just look at this potential jump. For a higher rate taxpayer, we're talking about going from 24% all the way up to a potential 45%. That's nearly double. It would completely change the calculation on when and how you sell assets like shares or a second property. All right, moving on. This theme of the government trying to find money everywhere it can, it continues right into our next section. And this one is a huge heads up for any agency workers or contractors out there. We need to talk about umbrella companies. Okay, so first things first, let's just do a quick refresher. What is an umbrella company? Well, think of it as a go-between. It's a company that technically employs temporary workers, contractors, freelancers, who then go out and do work for different clients. The umbrella company handles all the admin, like payroll and taxes, so they're the official employer on paper. So why are we talking about this now? Because HMRC, that's Her Majesty's Revenue and Customs, has put out a pretty stark warning. They've highlighted these setups where contractors get shuffled between a bunch of different umbrella companies, and they're basically saying, hey, some of these look a lot like tax avoidance schemes. So the message is loud and clear. You have to be super careful and know exactly who you're dealing with. Okay, let's switch gears a bit. We're moving from the big picture stuff to a really practical nuts and bolts update. And if you're a business owner, you absolutely need to hear this. The way you correct errors on your VAT return, it has officially changed. So, first off, that old paper form you might have used, it's gone. Say goodbye to it. The new process is all digital, and it works like this. First, you figure out the net error. Then you check if that error is below the reporting threshold, which is usually £10,000. If it's a small error, under that limit, you can just fix it on your next VAT return. Easy enough. But if it's a bigger mistake over that threshold, you must use HMRC's new online error correction service. Now listen up, because this next part is absolutely crucial. Just fixing the mistake on your next return does not count as formally telling HMRC about it. And you might be thinking, so what? Well, it matters a lot, because if HMRC decides the error was careless, you could still get hit with penalties. If you want to get the benefit of making an unprompted disclosure, which basically means you get a much smaller penalty because you came forward, you might still need to go and officially report it through that online service, even for a smaller error. All right, and for our final update, we've got a recent court case that is just a classic cautionary tale for anyone running a business that's losing money. It's all about something called sideways loss relief, which, in simple terms, is when you try to use the losses from one of your businesses to lower the tax you pay on your other income. So here's what happened. A taxpayer was running a woodland shoot, and it was losing money. She tried to use those losses to reduce her main tax bill. Now, the court actually agreed with her on one thing. It was run on a commercial basis. It wasn't just a weekend hobby. But, and this is the killer detail, they ruled it wasn't run with a view to the realization of profits. It's a really fine line, but it's a powerful one. You can be doing all the right commercial things, but if there's no realistic chance you'll ever actually turn a profit, then you can't claim that loss relief. So, what was the nail in the coffin? What was the key piece of evidence? It all came down to a single number: one. Just one profitable year in 15 years of business. When the tribunal saw that track record, they basically said, look, we get that it's a commercial operation, but there's just no reasonable expectation here that this thing will ever actually make money. It's a really sharp reminder that just wanting to be profitable isn't enough. You have to have a credible plan that shows how you're going to get there. So there you have it. From big picture budget speculation all the way down to the nitty gritty of a VAT correction and a cautionary court case. If there's one takeaway, it's that the tax world is always changing. So that leaves us with one final thought for you to chew on. With everything you've just heard, what's the one thing you can do this week to get yourself or your business better prepared for what's coming next?